Good day, viewers. Very pleased to be back with you on 3.0 TV, giving you the very latest in market updates and news. So today we're going to start with the dollar index. I'm showing you the chart right now, and we can see that we've actually been in a rising dollar environment from 2008. That's the market crash, the financial crisis of 2008. Bitcoin was born in 2009. And actually, Bitcoin has been rising ever since, and so has the US dollar. But it tells a different story when we look short term. Shorter term, we actually see there's an inverse correlation. Long term, of course, there is a positive correlation. But shorter term, for example, we see here a high in the US dollar actually corresponded with the FTX low in the market when Bitcoin crashed to around 4,000 at the time. That was a high in the dollar index. So it's quite interesting now that short term we're seeing the US dollar falling in value, and that's actually corresponded with a rise in Bitcoin. So we're still seeing Bitcoin today at 105,000, around that 105,000 area. So potentially, though, you can see that we've been within a long-term parallel channel. So potentially the dollar is set to rise again in the not too distant future. We don't know whether that's weeks, months, or whatever, but there's big news in the markets at the moment. There are many potential drivers of markets. We talk about geopolitical news, we talk about macroeconomic news, fundamental news, technical analysis, all these different forms affect prices. At the moment, the big driver is, of course, the geopolitical news. This is the big news that Israel attacked Iranian nuclear facilities, and this has caused a massive sell-off in crypto and risk asset prices. And obviously, we've seen other currencies and assets moving in value based off of that geopolitical news. So it all depends on what is going to happen moving forward. Obviously, this news is currently priced in. We saw a sharp sell-off with Bitcoin. Solana, for example, sold off from $168 down to $146. We'll touch on that chart in just a moment. There's some good news going on in the background as well. Obviously, some news out of the US with the regulation, some positive news there. We had positive ETF flows of late. That has turned negative just recently with this geopolitical news. But in general, the macroeconomic outlook is reasonably positive. We've had good inflation news out of the US. Both CPI and PPI news have been better than expected. This actually provides a good backdrop for digital assets. So I'm reasonably positive long term, but short term, no doubt there is some serious uncertainty in the markets. And we need look no further than Bitcoin, the Bitcoin chart to see that. This is the longer term chart, the weekly chart. If I move back to the 4-hour chart just to focus a little bit more on the current detail of the market and prices, where they're going at the moment, we can see with Bitcoin that we've had a corrective move down from the previous all-time high. It looks like a corrective move to the upside. And potentially we've started moving to the downside again. So we had, and we mentioned this in the previous show, we had some hidden bearish divergence telling us that price was going to go down. And right on cue, the price started to decline from that hidden bearish divergence signal. Maybe if I open out a little bit more and just explain what that actually is. It's basically when we see lower peaks in price and corresponding higher peaks in RSI. This is known as an oscillator, and it's a very good technical indicator, one of the most powerful technical indicators that I use to predict and determine where price is likely to go in the future. There are no certainties in trading. There are only probabilities, and to every there are possibilities, and to every possibility that we assign a probability. And that's how we manage our risk reward to trade markets successfully. And of course, I've traded for about 40 years now. So I've learned a lot of the tricks of the trade, and this is one of the most powerful. So for example, even here, we had some hidden bullish divergence, and it told us of a price rise, and that's exactly what happened. We had a very long-term regular bearish divergence signal here, where we basically saw higher peaks in price, and we saw a corresponding lower peaks in RSI. That told us of the sell-off from the all-time high back here of 112,000. So these signals tell us a lot about where price is likely to go. Right now, we don't have any particular signal in place. There is a great deal of uncertainty in the markets, particularly with what is going to happen next with the Iran-Israel debacle. So currently, Iran are backed into a corner a little bit. They've tried to retaliate. I think they've been surprised themselves about how advanced the Israel military is, how successful they've been in taking out Iran's not only nuclear facilities, but also a lot of their military, even military leaders. They've been very, very effective in what they've done to try to limit any potential threat from Iran. And Iran, of course, have been threatening to wipe out Israel from the face of the earth. So this is why Israel have been so enthusiastic, really, you could say. It's maybe not the right word, but enthusiastic about diminishing the Iranian military capability. So as I say, here's Bitcoin looking shorter term. We had a strong move down from this local high here. It's quite an impulsive move down. We're just having a corrective move higher, looking like it's in the form of an ABC move higher. So we do actually expect lower prices to come for Bitcoin. Even Ethereum, which had obviously done reasonably well of late, had a very sharp sell-off based off of this news. So we sold off from around that 2,870 area. We actually sold off to a low of 2,400. So, it's percentage-wise, very, very substantial sell-off there. The move up again has been just corrective. So we're still await further moves down. So I think this tells us that it's highly likely we're going to see further military escalation in the Middle East between Israel, Iran, even maybe some of the other neighbors around Israel. There will likely be further escalation, further trouble there. The pot is boiling, and I think it's going to continue for some time. So the weekend may be quiet, but following the weekend, I think we'll probably resume that sell-off to take us lower on prices. And that would fit with the overall picture that we have from an Elliott wave perspective. And I'll just show you that a little bit more about that when we look at Solana now. So from an Elliott wave perspective, and maybe on one of the shows, we'll actually give you a little lesson on Elliott wave, how it works. It was actually designed by Ralph Nelson Elliott in the 1930s, and it actually shows market structure based on behavioral analysis. And markets tend to move based on the sentiment and behavior of the majority of players in the market. So it's proved to be, well, I've used it over many years, and I've actually done very, very well with it through market crashes, etc. This is showing extremes of behavior and sentiment with market traders. And it's one of the better indicators I find. And I also use it with the fear and greed index. So sometimes when fear is extreme, then actually the market moves in the opposite way of what you'd expect. And also, obviously, when greed is extreme, when everybody is greedy in the market, everyone's buying into the market, there's only one way to go. It's going to sell. So I do watch fear and greed as a contrarian indicator. But here's Solana. We've had 5 waves down. I've labeled that as wave A. We've had a very choppy movement up. I've labeled as wave B. We did have some really nice divergent signals on different time frames telling us there's going to be a sell-off from here, precisely what happened. And I'm expecting lower to go. We've already technically, potentially, completed a C wave down, but I don't think it's actually the case that we're complete. I think there's probably still further down to go. But these, for me, are just buying opportunities. DCA, I think, is the way to go. That's dollar cost average. Don't put all your eggs in one basket. Actually buy at different levels. And my strategy is to buy the dips. So I suspect we're going to go lower, and there'll be more opportunity to buy dips in the not too distant future. What I did here, I measured, and I'll just move this Fibonacci measurement tool here. I measured from the top I need to scroll out a little bit, I think, to show you where I measured. But basically, I measured the top of the wave there to, let me just check now. I'm projecting a move down probably to at least 135. I measured on a previous Fibonacci measurement. I'm expecting 100% extension, possibly to 135 area, possibly even lower, before I'll start to even consider buying. We could even dip, and I've got here my ultimate target would potentially be around the 120 area. So sounds like it's extreme. We've already sold off though $20 on Solana. We're just looking at a further $20 potentially. And if the Middle East troubles continue, then I think that's reasonable to expect. We'll just touch on dollar index here. Dollar index, the dollar has been weak, and that tends to, as we said earlier, it tends to correlate with, if you see weaker dollar, you tend to see strength in risk assets like Bitcoin and so on. So there's two forces facing off against each other here. We've got the geopolitical forces, which are negative to the market, but we've actually got some fundamental macroeconomic news with weaker dollar, with subdued inflation, etc., causing strength in crypto markets. So there's actually a battle. So it's a battle between the bulls and the bears. And we don't know for sure at the moment which are going to win. At the moment, the bears are in control, taking prices lower. But at some point, the bulls will fight back and try to raise prices again. And as we approach long-term support on the US dollar, I think we could be seeing a turn in the US dollar. For the time being, there's actually, as I say, it's actually a little bit unclear, a little bit uncertain. When things are uncertain, it's probably best to keep your powder dry and not to basically expose yourself to risk because it's a little bit uncertain. But for the time being, I think, as I say, probably more escalation within the Middle East between Israel and Iran. Time perhaps to keep your powder dry, stay out of the markets. So that is my guidance for the time being. Just wait for some clarity, wait for some important price levels that we'll perhaps touch on in the next show and tell you where your next move should be. So I hope that was helpful. Thanks so much for listening and look forward to catching up with you again on Thursday.